I have tried every scalping strategy out there, and this one beats all of them by a mile. Out of the 6 years I've been trading, I wanted to figure out what really is the best scalping strategy to use. And after the past month of deep diving and testing out every scalping strategy I can think of, from support resistance to ICT to opening range breakouts to moving averages to everything, I landed on what I believe is the best scalping strategy that will make you rich. And I might have a bit of a bias because this scalping strategy was the one that actually pulled me out of my DoorDash job and allowed me to become a full-time trader and go on to help teach over 400 students how to be successful with this scalping strategy. So let me dive in the charts and show you the exact strategy step by step that you can copy so you can make hundreds of dollars just like this. Alright, so for the rest of the video, I'm going to cover 3 different things. First one is the main concept I use of my scalping strategy, the one that works the best. I'm going to show you the 2 confirmations I use with it, and then also going to show you the actual entries, stops, targets, where to figure that out, the execution side of things, okay? So what is the actual main concept? It's not support resistance, it's not ICT, it's none of that. It's something called supply and demand. Now, if you have absolutely zero clue what supply demand is, that's totally fine. I'm going to give you a quick overview and also show you how to learn more information about it totally free. Okay, so supply demand is all about fast price action. You want to see price move very fast. When you see price move fast, that is where institutions are going to be buying and selling. So for example, if we're looking at this chart here, you can see that we have a relatively slower kind of price action here. How do we know price is slow? Well, it's very back and forth, very choppy, very up and down, not a clear trend, right? As opposed to this kind of move right here, you can see that we have a very fast move higher. Price goes down, we have a few candles, price just goes straight up, almost no pullbacks, not a lot of wicks. So it's very clear that this is a very good area where we can find strong buyers, and that's where a good demand zone is going to be. And then you can see something like over here, we have a little bit of a stronger sell area where price moves very, very fast, where again, we have a strong candle, we have pretty much no wicks, no pullbacks, it just goes straight down, and that's where we're going to find a pretty good supply zone. Now, these supply and demand zones always start at the base of where that move happened, okay? So for example, if we look right here, you can see that we have about 4 or 5 candles right here of just straight consolidation back and forth, indecisive, and then we have a very fast move lower. And so when we have that kind of base that forms, we kind of draw a box around it, and that is going to be our supply zone, okay? And we actually extend that out like that, okay? So this is going to be our supply zone because we know there's a lot of aggressive sellers in this area. They're able to push price down really fast, which shows aggressive sellers. And that's going to be our supply zone. And then you can see over here, we have only 2 candles of consolidation before this fast move higher. And so this is what we would call a demand zone. We kind of have this little 2 candle base. We can extend it out. I'm just going to make it gray so it's easier to see, and this is going to be our demand zone, and we can go ahead and extend that out like so, and you kind of get already a good sense of how this strategy works. You can see price comes back down, we tap this demand zone, we end up moving higher, right? When price comes back up to the supply zone, we're probably going to tap it and move a little bit lower, and that's the general idea of how supply and demand works, and you can see how it's doing that in real time right in front of you. Now, I don't want to spend too much time on this because the real key of the strategy is on the confirmations and the execution. And so what I've actually done is I've put together a free supply and demand course for you. Okay, and all you have to do is click the first link in the description below. You can join the vault. It's completely free. It'll go over everything supply and demand, a lot more in depth than what I just did. A nice little video course going over all that for you. So go ahead, check that out if you don't know anything about supply and demand. But let me go ahead, dive into the next 2 confirmations. They're going to really turn the strategy really, really important. Okay, so the first confirmation of this strategy is going to be making sure that your supply and demand zones are taking out the opposite supply demand zones before you get in them. I know that sounds a little confusing, but let me go ahead and show you an example, okay? So if we get rid of all this, you can see that, again, we have this demand zone here. Now, before this demand zone forms, price is actually going to be in a downtrend. You can see price starts up here. We have a low, a high, a low, a high, and a lower low, okay? So price is very obviously making lower lows and lower highs and telling us that it's in a downtrend. Now, typically in a downtrend, you don't want to be buying demand zones, right? You can see if we were to call this area demand zone, which it's really not, prices went right through it, right? Or we could look at this demand zone right here, same thing, prices went right through it. And so in a downtrend, it's very obvious that demand zones are going to break and supply zones are going to hold. And so the first confirmation I want to look for when using this supply and demand scalping strategy is making sure that my demand zones have taken out a supply zone, or my supply zones have taken out a demand zone, which essentially just means we're following the trend. So you can see by looking at this example here that price is in a downtrend, but what happens is price actually goes and takes out this high, right? Whether you want to call this a supply zone or a strong high, right, or a pivot, price ends up taking it out. And by taking it out, I mean price gets above it. And so this tells us that the shift of trend is changing. We're going from lower lows and lower highs to higher highs and higher lows in this area. okay? Which tells me that this is actually going to be a very good demand zone because the buyers who were buying down here at this demand were able to take price above the sellers who were selling in this area, right? Because originally the sellers were in control. Price was moving lower, lower lows and lower highs. And now if we zoom out, buyers are now in control at this moment right around here, okay? Because now price has broken out of that supply zone. We now have buyers who brought price above supply, telling us that these buyers are stronger than the sellers here, which means when price comes back down to this demand zone, that is our first confirmation to tell us, hey, this demand zone is likely to hold. And so that is the first confirmation that's really, really important. You want to make sure you're sticking to when trading this supply-demand strategy, is that you always want to make sure your demand zones have taken out a previous supply zone or your supply zones have taken out a previous demand zone. And the best way to do this is simply by just looking up and to the left or looking down and to the left, okay? If you're looking at a 1-minute chart or a 5-minute chart in any futures or any indices or whatever you're looking at, is if you look up and to the left, you identify the trend, you can find your narrowest or your nearest supply or demand zone, and in this case, it would be supply zone. Price gets above it, so now we know that this demand zone is going to be in control, and it's a solid demand zone that we want to be looking to buy at when price comes down to it. You can see we got a pretty good scalp off it for about, I don't know, like 50 points or so. And so just to show you guys another example of when this wouldn't work, if I zoom out a little bit and you can see right here, and this is in pre-market, and again, I don't really like to trade pre-market. I like trading regular trading hours. But you can see we have this nice demand zone that forms right here, right? So what does price do? Price has a nice down move. We have a little consolidation. We have a fast move higher. However, the buyers who bought down here, whoever was buying this demand zone, right, could not take price above this high or above this supply zone right here, right? Supply held this area, which means sellers are still in control. And if sellers are in control, then we are going to expect demand to break, because if supply and demand always held, then we would just be stuck in this channel back and forth, right? And so because this demand zone wasn't able to take price above the supply zone, that tells us that sellers are in control and we don't want to be buying or scalping at this demand zone, which makes it really, really simple, because if you're following this rule, you're going to save yourself a lot of time, a lot of money by not taking these chances. And you can see, what does price do? Price ends up breaking this demand zone here. We go lower. Price comes back up, and we probably zoom out to like a 5-minute. We'll get a better idea. Yeah, you can see exactly right here, right? We have a nice supply zone right here on the 5-minute chart. Price comes up to it, and we end up going lower. Price comes back up again, right? Down in this general area. We don't actually reach this supply zone all the way up here, but we come up pretty close to it, and we end up going lower, right? And what do? If we have any demand zones down here, we end up breaking it, just like that. Because again, trend is really, really important. If we are in a downtrend and demand keeps breaking, you don't want to be buying demand zones. You only want to be shorting supply zones. And by having this first confirmation with you, you're going to be able to have a huge advantage when it comes to trading supply and demand, especially using this exact strategy. Now, the next confirmation I want to show you guys is volume. Okay, and volume is really, really key because volume shows where there's institutional activity. So if I get rid of all these things right here, we're going to go back and use the supply demand zone example from today on NASDAQ. Okay, so again, we're looking at the 1-minute chart. You don't need to go to a 5-minute. Don't need to go to anything crazy. A 1-minute chart works completely fine on a NASDAQ or ES or whatever it is you're trading. And so you can see that as price comes down to this demand zone, I want you to look at the volume down here and tell me what you notice, right? We see that for most of the day, volume is kind of peaking out around this range here, right? We have a few spikes above it. We have, especially at the open, that's going to happen. But volume kind of drifts down for the next like 30 minutes around here. We kind of see, level price action. You kind of get a good idea of where the average volume is until price comes back down. And what do we see when price comes up to this demand zone? We see a huge spike in volume, right? You can see that on this exact candle here, which ended up being the low, right as price comes into demand, we see that this is a huge spike in volume, all right? And when I say huge spike, again, it's all relative. It's not like a specific number. You simply got to just eyeball it and say, okay, let's look at the past 10, 20, 30 candles, right, and see if we have anything relative. And this is definitely the highest peak of volume we've had in the past 30 minutes since 10 a.m., right? This is around 10:29. This is about 10 a.m., okay? And that is a pretty significant amount of volume, okay? And when you see high volume coming into a demand zone or a supply zone, that is a good indication of a reversal. That is something you definitely want to look at and use in your trading. If price came into this demand zone and we had low volume, that is not necessarily good. Okay, now price can still react off it. Price can definitely still come off it and you can get a nice scalp off it. But if you want to have the best risk reward, you want to have the best chance of success, you really want to see an increase in volume when trading this strategy, right? So with the first confirmation being trend, with this example here, price obviously broke above this high, so that would be a good instance. And then second thing, when price comes back down, you simply wait for this candle to close. Boom, we have an increase in volume, pretty good. And then you can look to get in long right around here on the next candle as it opens and have a very good stop, loss, and target to trade off of this strategy. So simply by using volume and using trend with supply and demand, you're going to have a much higher win rate and a much higher risk reward when using this strategy. Okay, so now that you've learned the main concept of the scalping strategy, which is supply and demand using both trend and using volume, I want to get into the execution side because this is really, really important if you're going to be trading both of these things, right? So first off, make sure you write this down. You know what this is, so you can use it as a kind of a checklist going forward. But let's talk about the execution. So let's say we're trading NASDAQ, for example. And again, you can use the same rules to apply to ES or gold or Forex or whatever it is you're trading. But price comes down to this demand zone. Now, if we're trading based off volume, which again, we want to wait for that volume confirmation. So let me go ahead and redraw in this little demand zone we had drawn like that. So we're going to get in right after this candle forms. Okay, so right at the open of this 1030 candle. All right, and if we are getting in right here, we want to put our stop loss right below the low of demand, okay? So you can put it like 1 or 2 ticks below it. So we're going to do something like that. We're going to be risking about 26 points on this candle, okay? Or 26 points on this trade. Now, what you want to do, and the way I like to trade this executionally, is by going for one-to-ones and then holding runners for longer, okay? So you obviously can't hold any runners if you're only using one contract. And if you're using one contract, that's fine. I highly recommend going for about one-to-one risk rewards. So in this case, for risking 26 points, you'd want to go for 26 points, which would be right around here. Okay, and just like this, you can get a nice one-to-one. You can risk $500 to make $500, risk $200 to make $200, whatever it is within your risk management plan, you can do that. Okay, and as long as you have a win rate above 50%, you will make money using this strategy. It's as simple as that. And I promise you, if you're using supply demand with both trend and volume for every single trade, for every single confirmation, you will have a win rate above 50%. I've been doing this and trading this for so many years. I promise you that will happen. Now, if you are in the ability to trade more than one contract, maybe you can trade micros or you have a larger account, that's when I like to get a little crazy, okay? And what I like to do is this. Here's my best execution style to trade this strategy. I will get out half my position or majority of my position at a one-to-one risk reward. So let's say we have 3 contracts, okay? Price comes in, we get in this NASDAQ candle right here at 3 contracts, right around there, okay? Now, at this one-to-one risk reward, I'm going to get out of 2 of my contracts. So I'm going to get out 2 of my contracts. I'm going to lock in that profit, make some good money, and then I'm going to move my stop up to break even. Okay. At this point, I don't want to take a loss on the trade. I already am up in profit. I'm going to take my 2 contracts, move my stop up to break even, and then what I'm going to do is go ahead and leave runners for a move higher. Now, in this case, I probably would have got stopped out, right? What you can do is depending on the chart, it's how I like to trade. So for this example, I would have said, well, we have a little bit of a supply zone right around here, right? I'm going to go ahead and put my next target up here. And then boom, just like that, our original 1-to-1 now becomes like a 1.4-to-1. So we get a little more profit on that extra contract. Now you can also say, well, if the higher time frame trend makes sense, which in this case it doesn't, because if I zoom out, we're kind of in this downtrend. But if the higher time frame, made sense and was aligned, then I could say, well, I'm going to look for a move a lot higher. I'm going to look for a move, an 80-point move, 100-point move. Maybe look for a move all the way up to this high up here, right? And so you can actually catch these much bigger wins even if you're still scalping. And because your risk is still, if you move it up to break even, you're already locked in 2 contracts of profit, your risk is still going to be the same. So if I was risking 500 originally, I'm still going to be risking, I'm already up a few $100s in profit. I'm not risking any of it, okay? So that's the best thing I like to do is if you have multiple contracts, hold some runners, okay? Because you never know. Sometimes price will just keep going up and up and up, and you can make a lot more money with your profits. And so that's the best way I like to look at the execution style is keeping it like that. And again, you don't need to be really crazy. I like to keep this on a 1-minute chart. I don't use like a 5-minute, 15-minute chart because sometimes these supply demand zones can get really, really big, right? If I'm using a 5-minute chart and my demand zone now looks like this, I'm going to be risking, 40 points. And I may not have the risk tolerance to risk 40 points with one contract, right? What's really important is that you're risking the same dollar amount per trade and doing that based off the amount of contracts, okay? And if you can do that, you're going to be comfortable risking the same amount every single trade, and you'll be fine. But if you don't have that, I recommend sticking to the 1-minute chart. It's going to keep it really simple, really easy, especially on NASDAQ. You can risk 10, 15, 20 points. If you're trading ES, you can risk, 5 points max, 2 points, 3 points sometimes. Really depends on the setup or the strategy. But by being able to do it, keep it really simple, 1-minute chart, simply using supply demand, simply using trend, simply using volume, and simply going for one-to-one risk rewards, you will have a profitable scalping strategy that beats all the other ones by a mile. And if you guys still have a bunch of questions on how supply demand works or how trend even works, I highly recommend joining the vault down below. Again, that is where the free supply demand course is going to be inside. We have an entire community. We have a bunch of different courses, how to use TradingView, how to find different stocks. We even go over market structure as well. So again, more things like how to spot a real trend, how to spot a fake trend, logical entries, time frame analysis. All of this is going to be inside the vault, which is my free community. You can go ahead and click the link below to join now. That being said, hope you guys did enjoy this video. If you did, leave a like, subscribe, comment down below. I'll see you all in the next video.